In this episode, we speak with Paul Edwards, Global Practice Lead at Grant Thornton Stax. Paul leads firm strategy and execution with a focus on market and commercial work for private equity clients across the deal lifecycle, from acquisition evaluation to value creation and exit preparation. Paul has spent more than 2 decades advising private equity firms and portfolio companies on diligence, growth strategy, pricing, and market positioning. Over that time, he has led more than 1,000 engagements and helped build the firm's private equity practice into a global business supporting hundreds of engagements each year. He brings particular experience in software, services, and industrials, and has been with Stax for more than 20 years. Paul was recognized by the Consulting Report as a top 25 M&A consultant and leader of 2025. Grant Thornton Stax is a strategy consulting firm focused on commercial diligence, value creation, and growth strategy for private equity firms and corporate clients. I'm your host, RJ Lumba. We hope you enjoyed the show. If you like the episode, click to follow.
RJ Lumba is the executive chairman of Market Insight Media and managing partner of Growth Cap. He is the host of Top Consultant, a podcast featuring today's best consultants who advise and provide services to corporations, governments, nonprofits, and other organizations. Executives and key decision makers tune in to Top Consultant to identify the most knowledgeable and experienced consultants for their most important projects.
Paul, thank you so much for taking the time to chat with us today. It's a delight to be with you.
Yeah, good to connect, Raji. Thanks for taking the time.
We can have a very interesting conversation because you are focused on the private equity space. Private equity has grown tremendously over the years. It touches many different sectors. But maybe just to kick off, which areas in particular do you help private equity firms on?
Yeah, so the Stax business, as has been the case for the last 30 years, is really focused extensively on market and commercial work. And so that may be helping private equity sponsors identify sectors that they want to dig down into, evaluate assets for acquisition during deal processes, working with portfolio companies on a lot of top line and cost initiatives, from how do we price, how do we think about new markets, new channels, right the way through to more and more in today's market. How do we exit well? How do we set the story up and the stage up for the next investor here in secondaries as well? We've been doing that sort of work for 30 years, give or take. So we're sat on a lot of IP and a lot of prior history. And we're probably working on around 350 deals a year and working with about 100 management teams a year in that regard. 6 months ago, we proudly became part of the Grant Thornton platform as well, providing commercial and market product legs to their broader offerings on the financial, accounting, and tax side of things too. So it's been a really strong relationship and something we're still in the early innings of, but the logic makes a ton of sense to our clients as well.
And do you work primarily with the larger private equity firms, mid-market, lower middle market? Which segment of the market do you focus on?
So we're really up and down, to be honest with you. We're working with 15 of the top 20 private equity firms by fund size, but majority of our work would fall within the mid-market and the lower mid-market. This part of private equity has really been growing robustly over the last 10 years from both a fundraising perspective, a number of funds standpoint, and then also a number of assets under ownership. A lot of the clients we worked with, individuals at large cap funds, are now clients of ours through their own funds that they've raised in the lower mid-market. And that's been really good for us because our value proposition is very strong within that group, where they're looking for deep subsector expertise combined with a private equity first approach to the work and an ability to serve and work at the pace of private equity in a robust manner as possible.
Mm-hmm. Are there certain sectors you find you spend more time in, or subsectors for that matter?
Yeah, I mean, that part of the market and general macroeconomics, over the last 5 years, there's been a significant growth for us in software and services. You can imagine that's fueled a lot of growth in private equity overall. Secondarily, though, we see a lot of work in services, be that what we call white-collar services, professional services, blue-collar services. A lot of focus there as well for us. And more now leaning into places like government, education, nonprofits, another growth area for private equity too.
Hmm. Curious, I mean, because you have a front row seat to what's happening in software investing in the private markets. Obviously, in the public markets, it's taking quite a bit of a beating, primarily because the public market can overreact to maybe the threat of AI. But meanwhile, the majority of folks, I think, in the software industry have really thought through how this is going to play out and how they're going to approach AI, within their businesses and kind of leveraging it to offer it to their customers. What are you currently seeing related to enterprise software companies and how they're approaching kind of this wave of AI technology kind of penetrating the market?
It's a great question. And it's definitely the question of the day as well, as you would imagine. We spend a lot of time talking to private equity firms, not just about how they're pursuing SaaS deals or vertical software deals, but also the questions their investment committees are asking them today as well. That becomes pretty important. There's an overarching sentiment, certainly I heard from one large cap sponsor last week. If you don't know how to price it, you don't know how to value it. And if you don't know where the disruption's coming from or the extent of the disruption, it becomes very difficult to kind of move on. So we've definitely seen a decline in the last maybe 2 months around volumes within vertical SaaS, either being brought to market or private equity firms doubling down. That being said, I think it's been a lot like the last 3 years in private equity overall, where there's been narrow recovery or narrow high volume. This is really assets that I'd say are what we'll term as systems of record. So in other words, are they critical plumbing in the infrastructure here as well? Are they creating data that can be leveraged for the betterment of the business, not just managing workflows and moving data from one side to the other? And then within the business itself, is it termed mission critical? Is managing this way with this tool mission critical? In each of those settings, we find that software and the SaaS businesses we're looking at to be in demand and highly protected from a lot of what we see here as well. That being said, the broader market, we see a lot of demand for one of our products specifically serving private equity and specifically serving management teams, which is what we refer to as an AI diagnostic. The AI diagnostic essentially provides in a couple of weeks a management team and a sponsor a point of view on how they're leveraging AI themselves from their own internal operations. A $50 million, $100 million software company, they may be serving very different needs, but they largely have the same sort of functions: product development, how we think about go-to-market, how do we think about channels and relationships, think about pricing, etc. And being able to see and diagnose essentially how far along the leverage model they are from an AI standpoint versus peers and other benchmarks is super insightful for private equity as well as management teams. But then also diagnosing where functions and also processes around the software can be enhanced from the product that they're selling, as well as de-risked through AI too. That diagnostic allows a private equity firm to get a really good flavor for the work they need to do for the company to set the business up well for success at the point of exit as well. So, like I said, I think there's a lot of focus at the moment, but I do think that, like private equity has done for many years, there's a robustness around resilience, and we'll see that come through in the coming weeks and months ahead as well.
I can imagine that AI diagnostic being perceived as very valuable to, both the private equity firm and the portfolio company management team. I'm curious if these firms and teams have their choice of other consulting firms out there. I mean, Accenture, Deloitte, McKinsey, others that could provide a comparable tool or analysis. How do you differentiate Stax being able to do it maybe better or maybe more in depth or maybe more specialized? How do you kind of highlight that to maybe a prospective client?
Well, I think there's a couple of ways, really. I think, for us, we've been incorporating AI in particular into our objectives and into our commercial and value creation work for much of the last 2 to 3 years. So we've hired well as well in that regard, and being part of the Grant Thornton platform has also allowed us to really put AI front and center in even diligences and that don't necessarily have it front and center. Secondarily, I think the focus that we've had within software historically positions us well to have a ecosystem or a subsector level point of view very quickly. At Stax, we've worked on or for over 70% of all sponsor-backed software assets. So when you've got that sort of back catalog, if somebody's looking at something in retail software or distribution CRM or, you name it, there's normally at least half a dozen analogs or situations which we can call on to help understand how a business looks today versus how we found similar situations historically as well. And then I think the third piece to it is our selling point over the last 20 years, not just the last 6 months, has really been about the idea of fresh work and fresh perspectives. And there's no greater catalyst for the need of that than AI, where, you had a perspective on this market in October. That is now out of date. And so the ability to be able to generate fresh research on the money while also understanding historical patterns of development and evolution for these sectors allows you to not just give someone an updated point of view, but also hopefully allows them to look around corners in markets which are changing pretty quickly.
The ability to recruit top talent that can in turn help you deliver great advice to clients is paramount. How do you ensure you're able to get that top talent continuously coming to the firm and joining the firm and staying with the firm?
Yeah, great question. We very much believe that you never outgrow delivery. And by that, I mean, the idea of being able to deliver value to a client is not something that, you get promoted out of delivery manager or engagement lead roles, you're suddenly not responsible for. We incent and structure a lot of our compensation model around delivery excellence and delivery inclusion. It drives seniors from partner down to actually have a vested interest and significant push into delivery and presence in delivery, unlike other firms where there may be more of a leverage model in that regard. We're tending to find that the practitioners who are very strong in their subsectors, be that verticals or products, are looking to remain hands-on. So they're looking to remain as hands-on as possible. And that for us has always been a great avenue for growth of our team, as well as obviously a differentiator we think in the market with our clients. The second point I'd raise on that, though, is also that culturally at Stax and at Grant Thornton, there's no hierarchy or territorialism. A lot of other firms suffer from that, where it's like 19 different emails before you can actually ping a client. That's not the case in our world. The tacit knowledge of the firm has to be at the client interface. And so if someone has that knowledge and an ability to deliver client value, they should be talking to clients regularly. They shouldn't be talking to clients through other people. And that for us is what we think to be a key differentiator. And so for folks who are mid-career or approaching sort of the MD or the partner level, to be able to have that type of client access and potential client ownership in the very near term, we think is a strong differentiator. You don't have to sit behind the guy for 10 years to be able to do that. If you've got the content knowledge and you've got value to deliver to clients, you're going to be in that seat. And I think that's been a good mantra for Grant Thornton and for Stax over many years.
Is there an example you could share with us of a client engagement that you've had? Could be a recent one, could be one that you're just particularly fond of that showcases how you were able to provide significant value to a client?
Yeah, I mean, there's a lot of the time in today's market, there's a bit of a fungibility between pre-deal and post-deal. So what I mean by that is, you go back 10 years, commercial due diligence used to be really about how big is the market, how fast is it growing, how happy are the customers, check, 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 okay, we're moving on. Today, it's 100-day planning is part of LOI, post-LOI due diligence. Being able to say, hey, it's not just a great business today, but here's how it should look in 3 years' time. And here's the levers that you can pull to go down that route. We always say that, a lot of good businesses here have 38 ways to grow, which is a great thing, but it's also a terrible thing. A big part of our value, we think, is to bring a lot of the low-hanging fruit, short parts, high return type focuses to management teams and to sponsors. And so when I think back at the engagements that have been truly differential here, it's as much been about the things that we've taken off the table for clients as the things that we've kept on the table. One in particular, we were working with a large insurance software business, which was owned by large cap private equity. And a considerable part of their focus was that they were getting beaten up by a couple of peers in the market, even though they felt they had a better product. They were also seen as being the most expensive in the market, even though they were actually cheaper. And our work came in and basically helped diagnose essentially what the customer perspective was and how, frankly, the bundling strategy around value was really off for this business. How they were bundling product and then how they were pricing those bundles was a real disconnect with where the customers saw value. And For us, we were able to present back essentially how a change to bundling and how a change to pricing within those bundles should look, and also how that should then tie to not just new customers, but existing customers. And it was one of those meetings where your data was so clean and clear, and the conclusions were so specific that during the board meeting, the CEO stopped the board meeting and said, we're going to take an hour-long break here because we need to get the sales and product guys on the line here and tell them the strategy's changing today. Mm-hmm. And they went ahead and did that. You fast forward 12 months, same customer revenue was up 22% without churn moving, and new logo acquisitions was up 8% compared to historical growth of 2 to 3%. Mm-hmm. That's genuine impact, and that's near-term impact. And I think being able to have those actionable findings where a consulting report isn't just a pretty PowerPoint that everyone claps on the way out and then doesn't take off the shelf. That's something we pride ourselves in, and actionability and results there too.
Great example. Switching gears for a little bit, we like to learn a little bit more about you, the person. Can you tell us where you're from and tell us a little bit about the early start to your career?
Yeah, originally from the UK, from Wales, town of Cardiff, 150 miles west of London. Been in the US for 25 years now, always in Boston, which is where I'm calling from today as well, just west of the city. For me, the journey here, been 21 years at Stax and Grant Thornton Stax. It's been an incredible journey because I was the fourth person to join our then Cambridge, Massachusetts office. And, you then look back and you're north of 200 people across 5 locations. And I remember back the first day I joined, we were talking about what private equity actually was and how we could potentially see that as a good path for us as well. I started my career, like many folks, in big box consulting. Big box consulting, there's strength and scale, but oftentimes folks feel scale always equals superiority. And I think in especially private equity consulting, nimbleness and an ability to change what you do and who you do it with speed becomes really important. Mm. And it was pretty evident to me in the early part of my career in a large firm that client centricity was always going to take a backseat to the way we always did things. And at Stax, there was the opportunity to not just build product and build a go-to-market, but also when we got it wrong to change it, when the clients told us 9 other things that they needed to build them, and to be nimble in that regard too. And I think that for any sort of advisor at any stage in your career, you aspire to be as hand in glove with your client as possible. You don't want your firm or your firm's bureaucracy or the way your firm sees the world to, in any shape or form, limit the ability you have to deliver A-grade results to your client. And I think at Stax, we were very fortunate for 20 odd years to frankly play it as we built it, I guess. And I think that that's been a really good sort of cultural build for the business. And in Grant Thornton, as a partner, we found a group of folks who think exactly that way as well. And that's been a really good positive for our people as well.
We're coming up on the tail end of the conversation. I have 2 final questions. One is, can you tell us about a person who has had a profound influence on you?
I'd have to say my father. I think whether or not we're in, from personal relationships or professional relationships, a big part of everyone's role, I think, is not just succeeding for themselves, but also providing the shoulders that others can stand on. And mentorship and opportunity is something that I learned a lot about from my father, who was never anywhere near this type of industry, but was all about making sure that every opportunity was presented to his kids. And I think for us in a professional sense, mentorship, development, and the nurturing the next generation is critically important in consulting. Now more than ever, given the rise of AI and things like that, but being able to genuinely guide and influence and develop the talent, the next generation of talent, it's not a nice to have, it's a requirement of all of us in senior positions.
Last question. Can you tell us about a charity, cause, or other endeavor that you're passionate about?
Yes, I'm pretty close here in Boston to a number of homeless charities. A couple of good friends work on the boards of them, and I've been heavily involved in 2 in particular here, serving the greater Boston area. What I would say is that for those charities, unfortunately, a 20-year association with one of them, the situations that they find themselves in from both a need for their services as well as the funding ability around them, the need continues to rise and the funding ability continues to fall. It's pretty sobering to be part of those meetings and those discussions. I just say that for all of us professionals in these sort of white collar industries to genuinely find the right time to share your skills and your experiences into some of those boards becomes really important, because I've certainly seen just in the last 6 or 7 years, not just COVID, but beyond that, there is a hell of a lot that the consulting industry and the investment industry can be leaning into around things like homelessness and poverty and child poverty in some of our best known and best loved cities. They need not just our money, but they need our expertise as well. And I would definitely say that that's been something that's driven a lot of satisfaction for me, but also it's like a consulting career to some extent. There's always more to do. And I would definitely say that it's incumbent on all of us to lean in with our skills if we're able to.
Well, we'd be happy to include a link to those charities when we do this post. Paul, I want to thank you again for taking the time. It's been a great conversation.
Fantastic. Well, I appreciate the time. Thanks again, Andrew, and have a good rest of your day.